is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this Monday, the 21st of September. Of course, for those of you who get my subscription service, you know that throughout the weekend I was sending charts out, and I kept saying 922, but it's 921. And well, let's go straight to the numbers, and thanks to our host earlier, and we hope that we can keep going through the day with a lot of information for you to be able to use judiciously and to be able to assess and come up with your own judgments, and hopefully with some kind of thought that's been put into it based on what some of us have suggested. So we're looking at a very interesting market here. Why? Because it was a very sharp pullback on Friday, and I think it was also influenced by the options expiration. Most importantly, what we're looking at here in the E-minis is that the E-minis are up 15.75. And what I've shown subscribers, actually, it was last night that I wanted to send out an alert saying, with the Chapman wave indication of the trend gauge on Friday being up at 4.36. Let me just move this chart away and you can see it. At 4.36, extremely high, which is invariably, look, there was that 420 level on the 24th of August. What did it do? The very next day we started a rally of 2-3 days. On the 1st of September at 552, the short-term trading index, the TRIN, went to 5.52. Very next day you started another 4-day rally. And then you went to 488 on the 4th. And what did you do? After the pullback, you started another little rally. So it seemed to me, based on a number of factors, that there was a real good chance that we would get a very sharp rally, and that the rule of thumb in the Chapman wave trend gauge is that when I get a reading, certain level, above a certain level, there should be, within 1 to 2 sessions, at least a 7 to a 9-point move in the futures. Very often is overnight, and that translates into a move to the upside in the cash index of the S&P and the Dow. That's number one. Number two is if there was a very sharp sell-off, it would be also indicating be careful, because if there's a certain period that the market just rests without going any lower, it could suddenly trigger that same 7 to 9 point rally to the upside in the futures, and that one would, in fact, probably include the cash index. So here we are. We're looking at a Dow up 173 and the S&P at 16,559. The S&P is at 1976. It was a good year. Up 19. The comp index is up 44 at 48.71. Gold is down $6 at 11.31. Had a fabulous move last week. We're going to be looking at this real closely. Was it one of those single legs to the upside that starts to fail? Or this time is it going to hold as the dollar starts to pull back? We'll look at that in a moment. But let me just say, silver is actually up a little bit. It's up 0.05 at 15.22. Platinum's down sharply. High-grade copper still in the 2.30 area, 2.39 actually. Crude oil is up $1.31 at 46.33. And you've got bonds down $1.20. Now, that's going to be very interesting. The TLT is down at 120.56, down $1.54. So I'll try to put the whole picture together in a moment, but I just wanted to say that the dollar, very important, dollar is up at 96.09, up 1.09. So I think it behooves us to immediately go to the dollar. I started off with the E-minis. I'll go to the dollar in a second. I wanted to show some of the techniques that I use in the Chapman wave methodology. There was a left side, right side price time match to the low of 1938.50 at 22, that's 10 o'clock last night. Most importantly, that sharp sell-off that occurred straight after the opening at 6 p.m. Eastern Time was saying to me, based on the fact that I was looking for the E-minis to rally up 7.9% from any particular low point, that there was a real good chance that we could have a rally and start the day maybe a little bit lower than immediately go higher. Well, it all happened overnight. And the pattern that we were looking at when I sent this out to my subscribers this morning with the 120-minute chart and the daily chart of the E-minis, December E-minis, was there were two fighting patterns. But the one with the predominance here was the high of 1967.50 made at noon on the 18th. That candle was, in fact, the target after Chapman Wave silent doji candle when you went to a low at 1938.50 at 10 o'clock, and then at, that's interesting, yeah, and then at midnight, you went to 1938.50, and you started to move to the upside, not you, but the E-minis. That 9-period exponential moving average became a target, and it was broken. And what I said this morning when the futures were up about 5 or 6 points was, there's a real good chance we could go to the 200-period moving average in the 120-minute chart of 1960. But 1957 was the 9-period moving average in the daily, and that was the level to break. We broke that after I sent this out. You can see it right there, right there. And what I had as a target was right there, opening this up again, see the 120-minute chart, was the 1960 level, but really it was the 1966-67 area that was that candle's high bar. Also, there's a Chapman Wave inside wedge target line that says that by, now this is really looking out, this is looking out to 4 o'clock on the 22nd, by tomorrow, if everything holds, it's a big if, but if everything holds, and the 200-period moving average of 1960 point, let's call it 75, becomes a support level, then we could start to move higher, and then the next target would be 1983. I'm putting that out, but I need to give you the composite picture. Why? Because the MACD is turning positive now. The stochastic's turning positive in the 120-minute chart. But let me show you something. What's really interesting to me is that the MACD was still holding pretty well in the daily chart of the E-minis, and the stochastic was still above 80. Now it's dropped, overnight it dropped, of course. But let me show you something really interesting. If I go to the Dow, INDU, look at the MACD, still rallying. Look at the stochastic. It is at 71, just like the pullback on Friday took out a lot of energy. But the fact that the fast-moving average, the 9-period differential of the MACD is still holding so well, is so nicely above the, it's at, let me just check there. There's a 0% line, and it's still very strongly above the 0% line. That's that 0% line of the MACD, the green bars. That to me says that there's still internal strength, and that the exacerbation to the downside was really futures related and options related on Friday, and that it was a little bit of an aberration. The downtrend is still in place for the weekly and monthly charts, but the shorter term said, this is what I've been talking about for a while. Let me go back to this chart right here, and that says that the arch pattern that goes to an H, which then goes to a lowercase m, which then becomes a rather large arch, is unfolding right here. And that the up channel, these little dashed lines here, had been broken. The 9-period moving average was pierced on Friday, but now we're way back, not way back, we are nicely up above 16,509, which is the 9-period moving average support, at 16,565. So all of this is saying that there's still internal strength, that the sideways choppy movement, remember my expression, a rectangle formation, there's your rectangle formation, the gray background, a rectangle formation can last a lot longer than your patience. And that's exactly what we're seeing here. We need to do something. There it is. I just want to see if it's coming clear across. Yep, there it is. Yep, there it is, the gray rectangle pattern right there. So now let's go to what's very newsworthy here. And for me, newsworthy means that the dollar, instead of pulling back below key support, that 200-period moving average of 94.26, is now challenging the downtrend resistance line. And that is so important. Why? Because you've got a mini falling axe pattern, remember the Chapman wave falling axe pattern, that says if you take out and decisively close above a trend line like this, with lower highs and lower lows from an important top, it was that PT that was made back on the 7th of August at 98.33, it means that there's a real good chance that you're going to go to the upper peaks. And that peak there would be, the first one is 96.41, that's 60 cents higher. And then it would be the real big challenge of 96.62. Why is that a big challenge? Because once the dollar starts to pierce the 96.80s into the 97 area, this is a different ball game altogether, because what you've done, if you move this 120-minute chart away, what you've done, you've expressed very clearly that you do not, this is the dollar talking, you do not want to break support. You want to hold above the 9-period moving average in the monthly chart, creating the sideways consolidation, what we call a high-level consolidation. It makes support in the 93 to 92 area really important to hold, but it also says you've got a lot of support between the 94.20, 93.80s. If that breaks, then the very important support will be the low that was made, I think, on the 24th of August. Yep, 24th of August at 92.62. And at this particular point, the weight of evidence is suggesting that, if I look at the EUR, the USD, this is the euro-dollar currency pair, that there's a Chapman wave H formation that's forming in the euro-US dollar, and the exact opposite implications for a high-level consolidation. This is a low-level consolidation in the monthly chart and the weekly chart consistently now. Instead of having the cup formations that the dollar is having arch formations. There's an H that goes to a larger H, making an M pattern. And most importantly, if the euro takes out 1.09 support, that's going to say the dollar is going to go even higher. So this is very important. One of the reasons why I just so much wanted to have my opening call only comes out every morning by 8:35, a huge comprehensive list of things that we're looking at. But the Traders Corner, that's where we have our positions, and that comes out at 8:35 Eastern Time every morning. Once in a while, like we do on Friday, I'll have an update. It's very rare to do that, but I would have loved to have had an update last night to say buy 300% long dollar and go long the evening. So it didn't happen. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. traders. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Dow's up 177, S&P's up 19. I got a really interesting email just a second ago. Al says, I hear you speaking about cars, so I thought you might be interested. I watched things, and it was a strange ad I heard on the Houston radio station of 30% off Ford F-150s, which I thought was the best-selling vehicle. I checked here in New Jersey, New Hampshire, New York market, and they are discounting them here, too. Isn't that interesting? He goes on about the Nissan Rogue 2015, and he said when he checked on cars.com, he found that they were offering the Rogues at discount, and that he was shocked to find a new 2013 still in inventory, along with many 2014s within a 250-mile radius of New York City. So this is very interesting. So I looked at this the other day, and I'm looking at GM. GM's at 30.95 up 44 cents today. The low was 24.62 on August 24th. I don't know how many people actually got it there, but that's as someone in the den said the other day. Are you trying to tell me my eyes are incorrect? No, the price is the price. I'm just saying that there was an aberration on the 24th, and that some of those prices were not, yes, they absolutely are real, but they were not legitimate in the sense that everybody could get them. A couple of people might have got them from orders that were, and I bet there were orders that were standing there for ages and ages because it's the first served, and you might have had the perfect ordering, but you might not have got it. So GM's trading at 30.95, made a peak E. I've been looking at it all the time, and I keep talking about it, keep saying more and more American cars on the, when I say American cars, I mean those familiar American names, GM, Chrysler, Ford, etc. So when I'm looking at that, I'm thinking to myself, wait a minute, Ford is trading up 11 cents at 14.34, and it made a low of 10.44. If you go from 10.44 to 11, what was the high the other day? 10.44 to that little doji high at 14.88. you're talking about a $4 gain on a $10 stock. I mean, 40. What is that? 40% or something? 45. That is huge. So something's going on, and that's the reason I'm going to go back to this chart. It's just so important, at least for me and my subscribers, to realize that the pattern we're looking at with all the bad news is still a sideways consolidation after a significant internal low, not the residual low, but some kind of internal low. We might even have 2 or 3 of these internal lows, but it's an internal low that says you can hold for a little bit longer. Remember, I've been talking about the SPY, the huge candle SPY on the 24th. Look at that. Price volume, Chapman Wave's price volume spike low, and that says you can keep going, traveling sideways without making major new highs, but you can keep going. This pattern that's like a large arch or a bridge formation. It takes 28 days before it comes back to the area. It doesn't have to test the exact price, 182.40 in the SPY. It just needs to come back, and it will only come back on any close that takes out, first of all, 194.25 would be the first level. But if it takes that out, it's absolutely significant that if the 190.73 low of the 1st of September is taken out, you will probably go back and at least test the wick of this candle of the 24th, and the low is 182.40. So that's very important. But it also says that the upside might be significant for traders in a short-term position, but it looks limited. And it looks limited to the body of the candle of Thursday, and that low was 199.28 to the 202.89 area. Of course, 202, did I say 202? Yeah, 202.90 starts leg D. I don't know if we'll get to leg D right now, but I do think that we can chop around and make it very frustrating. So let's do a couple of other things here. So we've got the SPY. Let's do the Qs, 1, 2, 3. In the QQQ series, it's even a better pattern. In fact, I'm going to take that away. I don't believe in these trend lines in this particular pattern. I prefer more to look at the H pattern. Let's make this a large H. Let's just do this. Go to there. Go to there. Bend it down. And you can spike. You can still have a spike above it, but the formation says that it's going to be very difficult unless the QQQ series trading at 106.31, up 96 cents, is able to pierce the high of 108.73. Let me just type that in. 108.73, and at 108.74 you start leg D. If that leg D is quite sharp, that's something I need to talk about. I will be back. Oh, I didn't notice we've got Scott in Safety Harbor. Scott, you wanted to look at?
Alcoa.
Okay, we'll be right back with Scott. We'll look at Alcoa. You're right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and let's go to the chart right now that we're looking at, and I'm going to show it to you. It is the Alcoa chart, the daily chart, and I have a left side, right side price time match, and that says 10.25 would be the target, and that target would be by the 25th of September, and it's a leg A up in the weekly, and the 120-minute chart was the one that I wanted to focus on here, because it looks like that 10.16 level needs to be taken out for leg D. So we have got Scott and Safety Harbor, Florida, looking at Alcoa, and I wouldn't be surprised if you bought it this morning.
No, I bought it last week when we talked, and the chart was actually indicating no. And you said from my ears to the chart gods.
Oh, that's
and I guess
right.
they heard
that's
because
right.
I think I found another honey hole like Gilead. I've been dipping back in and back in. I got in at the 950 and been in and out probably 10 times, but it's really a very sweet trading range, and some articles came out. Barron says it should be $14 by the end of the year.
Really?
Some things that came out after I bought it. I just
Well, okay, a couple of things that we're looking at. Number one is, if you look at this chart, folks, let me just expand the weekly chart, open it up here so that you can see the daily chart, so that you can see something very interesting. I'm just not able to do it right now. I'm working with one hand because I'm holding a telephone in the other one. But if you had looked at this chart, I wish I could have overlaid the Dow chart or the S&P chart above this, because you would see that in that horrendous intraday sell-off from the Thursday news-related Fed speak, that was at 2 o'clock, and then that whipsaw down, then up, then down. You will see that Alcoa was just ignoring. Now, for my subscribers, we're looking at certain stocks that are ignoring the downturn because
I mean, it could not get beaten down. I mean, it showed such signs of strength. It was like a big bicep there. You know, it was just
so that this is what we call very strong relative strength. In this case, it would be nice to have relative strength pertaining to a broader spectrum of aluminum stocks, but we don't have that, so we have to do it in relation to, say, the S&P. And what's really important about this is that Alcoa and just a couple of stocks, I was just showing the Ford and the General Motors, even General Electric, have been holding quite well under these circumstances, which means that if we are looking at the sideways move continuing just a little longer before we get the next kaplop to the downside, what's very important for Alcoa at 998, and you can see it here in the 120-minute chart, the MACD is good, but it's dipping down a little bit, and the stochastic was really good on that big spike on the 17th to the 1016 level, and now the stochastic's pulled back. So this is just taking a well-earned breather, but most importantly, what I'm looking at here is that within the context of Alcoa, the daily chart, that 9-period moving average of 976, and remember that's the moving average that we looked at the other day, and that 976 level has been tremendous support. In fact, Alcoa hasn't even come back to test this black line. It hasn't even, it's only tested the the uptrend dashed line support. So here's what I'm looking at. It's very important with the market up like this that Alcoa either is taking a day of rest and independently tomorrow or by Wednesday, the latest, takes out the high that was made on Thursday of 1016 and then goes towards the 1025, which is the left side, right side price time match, number one. But I don't think there's anything wrong with your position, and I think the going in and out is excellent. But the way it's looking right now is that this digestive phase at this particular point, I got this 136 rule. It's great if the consolidation lasts just one day. It's good if it lasts 3 days, but it starts to last a little bit more like it did when it made that peak D at 994 on the 9th. It went 1, 2, 3, 4, 5 sessions, and it was only the 6th session that pushed it higher. But if it didn't have that big push and gone sideways a little more, I bet that you would have taken out that 920 support, and that wouldn't have been good. So the MACD held well. MACD is holding well today. The stochastic's holding well. Stochastic's at 86.
I think the news helped prop it up there, and I think a lot of people are because of the company and the fundamentals, which we don't look at that much anymore, but that and some news people are using it as a safe haven, and that's why it's not moving much, just in that tight trading range.
The Ford F-150 has an incredible amount of aluminum in it, if you read about that. And what's really important about that is if it's starting to see sales dropping off, at some point I would not be surprised if it's going to affect Alcoa. And that's the reason why the weekly chart is so important to be monitoring here, because the weekly chart is saying, yeah, nice move, but it's not the kind of, the week has only started. The kind of candle that says we're done with going down for now. We might do a little retesting of the $9.10 area, but we're really done going down is if the MACD opens up. That the difference between the green line, the fast-moving average, I call it the fast-moving average, it's a 9-period differential, and the red line, the slow-moving average, if that starts to expand, and the stochastic goes from 38%, which is okay, but it really should be up near the 50% level. So if it goes to 50%, you've got yourself a stock that you can keep trading like a Gilead, because all of a sudden it's showing the kind of relative strength continuity that you really want. That's why this week is really important. At any point, if it drops below $9.70, just be a little careful, because it could mean it needs a breather and it needs to go down.
Part of my strategy when I trade is the charts, and another part is public perception. And even though it makes no sense technically, I mean, you have a 52-week high of over $17 and the low at the 7 range.
Correct.
And from talking to other traders every single day, I see and especially people that kind of fool around with it and they're not really into it every day. They just glance at something and say, "Oh, wow, it's cheap. I'm going to get into it." And that seems to be in the name Alcoa. Of course, you can't beat that. And
Right.
I think that's part
So
of the reason
let me
that
just
stayed
add
where
one
it
little
is.
thing to what you were saying, because Scott, there's a really big difference between cheap and inexpensive.
Yes. Yes.
There's a very
right.
big difference between cheap, inexpensive, and low priced.
Right.
You know, when Google was moving up, even though it was really expensive in terms of the price, it was inexpensive in terms of what it was offering. And then all of a sudden, things came together. Netflix was the same situation. So Alcoa at this point is a low-price stock. So we must
a lot of people, when I used my strategy on Apple, when Apple did the split and so forth, I mean, here you got it stocked at $700, but I knew public perception, and I know that, I mean, I have an advertising background, and I knew that people would view this as being cheap, even though it really isn't a $100 stock. It's really a $700, but that's not the way the human mind works. Here's a stock that's $100, and it did it. You know, it went up. It went 20, 25, up to 135. So, you know, it did exactly what I thought it would.
Good. All right. Well, you keep on with your Alcoa. I think you've pinpointed yet another stock that has a very nice trading possibility, and you're doing well. So congratulations with that. That's my look at Alcoa. We did own Alcoa in my from opening call, but we're out of it now. I wanted to see how it was going to hold up. There are about 5
And I just wanted to say something. I'm sure that you believe in this, too. To all the people listening, when you do well in the market, make sure that you share that wealth. Make sure that you share that wealth. Make sure that you spend that money on other people, not just yourself, not just reinvest it. Because if you'll do that, you will get a blessing. That's an absolute fact.
I think that's sage advice. Thank you very much. I appreciate it. Thanks for calling, Scott. Have a great rest of the day.
You too.
Thank you. So, folks, we're looking at a BIIB. This is very important because, you know, the biotech has been my what did she used to always use a great word. She used to be here, TFNN bailiwick. It's my bailiwick. And we remain short to be the IBB, but the fact is that you've got some stocks like Biogen IDEC, Biogen Inc. This is a stock that was just recently, even in this last move up, went to 330.54, trading now at 303, down $10. That IBB, I'm sure, is making what I call a hat-trick top. I don't think we're going to see these prices in that particular sector. And what is it doing? It's impacting IBB. Let me just see the IBB. Oh, look at that, down 5.80 at 350.96 after a peak D the other day. So this is going to be very important. Why? Because you've got a peak F in the 120 minutes of the IBB just recently, and you've got a peak F in the IIB. That was one of the real leaders before. And all of a sudden, what we're looking at is that the IBB is under the 9 EMA, and I wonder if it's affecting the QQQ series. QQQ series? Yeah, the little gain that it had, now it's only up 66 cents. But I must tell you, the way I'm looking at this, I think that fund managers are going to start sorting it out, and they're going to start avoiding the biotechs so that money is going to be there, and they're going to be looking to see what can we buy. So let's look at, well, they're going back into the Paneras, etc. What is Panera doing? Look, Panera's nice. It's up 1 at, this is peak A, B, C. So, okay, Panera's holding okay, but it's also what I call a hat-trick top, 208 round number high back in, what's that, July, and it's trading at 179. I don't think it's going back to 208. I just don't think so. So we're going to be watching these sectors that were the best sectors. Oh, let's look at AZO. Auto parts. Aha. Peak E in the weekly. AZO trading at 730, up 568. Let me just move this away. Having this one-handed juggle. There we go. Oh, I love looking at these. So I'm waiting to see at what point do we start looking at AZO, AAP, let's go to AAP, as shorts. At what point is the market changing that you're starting to get such good bargains in the new cars that people say, hey, I'm tired of putting all this money in. You know, you have an old car and it keeps going, you don't pay a penny, just a little, few dollars here, a few dollars there. Then out of the blue, boom, new muffler, new manifold, do this, do that. And the next thing you know, you spend $1,800 or $3,200. You say, is that worth it? Is that worth it? Well, sometimes it's worth it. It's a great car. You want to keep it going. But then you say, wait a minute, I could lease the car. I could do other things. So I think people are going into that phase right now, and they're starting to say, wait a minute, I don't know if I want to keep putting money into the old car. I would rather be looking at something that I can go places without worrying about repairs, at least hopefully not worrying about repairs, and paying about maybe a little more, maybe a little less than what I'm doing if I add up all the expenses over a year on old cars. That's what I think I'm seeing here. Now, so that's AAP, that's Advanced Auto Parts. What was the other one? Orly. Just pulled back. Oh, I tell you something. This is going to be very interesting. Watch the O'Reilly Automotive Inc., 246 up 23 cents. We're going to be keeping an eye on these stocks in my opening call. I think that there's a real good chance that they will not see the most recent highs of just a few weeks ago. It doesn't mean to say that they're going to crash, but it does mean to say it's worth keeping an eye on, because a stock like Orly at 246, if it comes down 10% to the 222 level, the 9-period moving average support in the monthly chart, how does it affect the technicals? How will the weekly chart and the daily charts be behaving? That's a big drop. They don't usually drop that much. Well, in this case, from the August high of 258 down to the crash low of the 24th, 226. That's a big move, 30 points. Yes, 13%. So we're going to be watching these. Now, let's go to the TLT. The TLT, because that's impacting the home builders, down 136 at 120.74. Let me go to this chart here and show you something very interesting. This is my long-term, weekly, 30-year interest rate yield. This is the 30-year yield coming up. There it is. Oh, wrong one. Don't need that. Wrong chart. Close the workspace. Yes to all. And we'll go back to this one over here. Recent works. Long-term charts. There it is. Okay, so as it's coming up, this is going to be the 30-year, the 10-year, and the 5-year yield. Remember that trend line that I drew in quite a while back? And I said, that's that trend line. We've been there many times before. So anything you're talking about interest rates, just keep in mind that unless there's an aberration going to 4% in the 30-year or below 22 on the downside, we're just in a trading range. And we're in the middle of the trading range. We hit the top of it at 30.92 last week, and we're trading now at 29.95. Just stuck in this little range here. So we're going to watch. Is this going to turn into an arch formation or a sudden break to the upside? Well, we've got a break coming up. We'll talk a little bit more about it as soon as I get back. Dow's only up 112 now. S&P's up 11. What a fascinating market. Very selective. You've got to be very, very selective in choosing your stocks and sectors right now. Up and down. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi,
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So we're looking at the yields. So if you're looking at the yields, you also want to be looking at the home builders. So the home builders, I think, came out with today, a good report. I don't know why it shouldn't be, but it's down 31 cents, having spiked all the way up to 53.39, and it's at 51.43 right now. Made a peak D in the weekly chart, and it made a leg E, and then it could be a peak E if there's no new high this month at about 56.04, and it opened at around number 53. So this is a really important moment. Basically giving you that bar, you're getting a long wick candle, and that gives you an outline that says upside border would be about 54.50, and the lower down would be 48 to 46.5. Those are the parameters. If it starts to break one of those borders, it's a problem. Look at the HGX. This is the Philadelphia Housing Sector Index, and it is trading right now at 236.60, down 35 cents, having made a peak D in the daily, a peak D in the weekly, and a possible D in the monthly. And that's saying nothing yet in the monthly that says it's going to collapse, and nothing yet in the weekly because the technicals are very poor, yet the price is held pretty well at 236. But what it does say is if the daily starts to take out 232 to 230 support, 226 is the 200-period exponential moving average. Once it gets to 226, that impacts the weekly Roman candle from the week of the 28th of August and said, be careful, because 2207 is your next target. This is very important. Hasn't done it yet. Just a warning to say this is one of the better sectors. If you look at, I haven't looked at hog for a little while, Harley. We always look at Harley, but I haven't done that for a little while, sort of off my radar. See, Harley gave what I thought was potential peak F hat-trick top way back in July of 2014. Then it rallied very sharply and made that H pattern, the right shoulder failure. So it goes from 74.13 down to 54, and then Harley goes to 70.41. Oh, incidentally, I saw Harley the other day on Saturday, and it had a windshield. This seems to me like it could be a new fad. The windshield was painted. It wasn't one of those black ones. It was painted the orangey red color of the bike, and it made it look really snappy, really interesting. So I thought, okay, I like to look at trends. I thought, that is very interesting. So anyway, Harley is pulling back. It's the same pattern. The H goes to a lowercase m. So let's just sum it up. We're looking at a market. This is just a bounce within a market. I have a feeling that over a couple of days it could actually go a little higher, and then we've got to watch out. So let me give you the numbers. We'll go to the Dow, INDU. The Dow is trading at 16,489. Had a high today of 16,578. That whole 16,600 is really strong resistance. But if it takes out the 16,600, I don't care what the reason is, if it takes it out, you could get a leg D above 60,933. But the pattern says in the weekly, it's an arch formation. Be very careful. Why? At any point, if the Dow starts to go towards the 16,100s, you have to be watching the 16,000 level. 3 closes under 16,000 will impact the weekly, which will immediately impact the monthly. So we're looking at that really closely, number one. Number two is the volatility index. The volatility index is, at this particular point, VIX.X. It's trading above 20 again. It did go fractionally under, it went to 39. It didn't go to the 19s. I thought it had, but that was a mistake. So it went to 21.32. It's at 21.32 under the 9-period moving average. And all it's saying is that that same rectangle formation is holding. And if the volatility index closes under 20, 2 out of 3 days, this market's going down. This market will be able to hold up and rally. If it goes above 23, be careful. Start the next slide. Hey, sideways move as far as I'm concerned. Selectively long in certain things and short in others. Be back tomorrow. Have a great day.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
This is TFNN.